Bitcoin has a volatility of 60% roughly. The S&P has a volatility of about 15%. So what we have seen as a drawdown for Bitcoin is something like 40%. It's nothing. It's as if the S&P lost 10 or 12%. Nobody would call that a bear market. It's business as usual. And if you look at the company called Hermes, they have a balance sheet. And on the asset side of the balance sheet, they have boutiques that they own. They have factories that they own. You don't value a company by looking at its assets. You value the company by looking at how much you speculate it can enrich you. The most clever thing we can do with a dollar or with a euro is to borrow it. If you can borrow it over 3 years, it's fantastic. If you can borrow it over 10 years, it's better. Why? If it's too difficult, maybe I can explain it differently. There are today people that are ready to sell you at an mNAV of 1, something that could reach and has reached in the past mNAV of 20. And what is funny is that people are shorting, okay, let's buy it from them. And we are going to become the owners of a company that can borrow forever in order to buy one of the most precious assets. Bitcoin is here forever.
Hey everybody, it's Tyler Rowe here with the Bitcoin Treasuries.net Roundtable. I'm joined here with Yves Choueifaty from TOBAM. Welcome to the show, Yves. You launched the world's first open-ended Bitcoin fund back in 2017. Thank you so much for joining us today.
Thank you very much, Tyler, for having me.
And of course, I'm alongside with my co-panelist here, Alexandre Laizet of Capital B. Welcome to the show, Alex.
Nice to be back. Thank you, Tyler.
Yeah, so let's dig right in, guys. Of course, the headline news this week is the breakneck speed that MSTR strategy and Michael Saylor have been accumulating Bitcoin. But before we dig into that, Yves, I'd love to get your thoughts on the current bear market and kind of the opportunities that you see in this bear market in the Bitcoin treasury space and how you're thinking about allocating capital throughout this.
Okay. So, Tyler, I am very fond of definitions. As you're talking about bear markets, I have no idea what you're talking about. Let me tell you my thoughts on that. Bitcoin has a volatility of 60% roughly. The S&P has a volatility of about 15%. So what we have seen as a drawdown for Bitcoin is something like 40%. Or even 50%, it's less than 1 volatility. It's nothing. It's business as usual. It's as if the S&P lost 10 or 12%. Nobody would call that a bear market. Nobody would call that the end of the times. It's business as usual. For people who invested in Bitcoin a long time ago, a bear market, we've seen that in the past. When the Bitcoin went from 20,000 to 3,000. When it went from a little more than 60,000 to 15,000, this was bear markets. It was a multiple of volatilities down that were significant. Here we are at less than 1 volatility, so I'm not sure the market qualifies already as a bear market. It's really business as usual. It's ups and downs. The last drawdown, in my mind, had to do with something which was completely circumstantial. It was what usually are called the trumpets. Nathan Rothschild in 1810 said, "Sell at the sound of trumpets and buy at the time of cannons." I think that since October of last year, the trumpets were quite loud. I think that the cannons are louder now. And maybe it's a good moment now to reconsider. I would say that the same pattern is possibly applicable to gold. When you have the sound of trumpets, this is very bullish for gold. When you have the sound of cannon, maybe it's less bullish for gold. And I was at a conference organized by BlackRock, it's a launch conference here in Paris, organized by BlackRock for CIOs of asset management companies. And they were saying that, in fact, it's very rare that you should sell at the sound of cannons. If you test a model of cannons in the past, very often you'd better be a bull at the sound of cannons. It's very often a good moment to buy. So this is my long comment on the long-term cycle, on the whether we are bearish or not. I think I have a personal opinion that the 4-year cycle is going one day to be behind us, and the importance of the drivers of this cycle are fading across time. They are less and less important for obvious reasons and for less obvious reasons as well. So I am not sure we are in a bear market. I think that we are witnessing here one of the incredible gifts Bitcoins is giving us, and one of the incredible gifts is volatility. Every day we should thank volatility, because it's volatility which is making it that Bitcoin is not already worth $1 million. It's making it affordable for the audacious. This is my comment on the bear market.
Yeah. Interesting points to ponder there, Yves. And I'd like your take here, Alex. Certainly opportunity presents at the sound of cannons, and quite literally, in the Middle East, near and dear to where you reside, we do have the sound of cannons. Something I've reflected upon is that Bitcoin had been kind of a leading indicator of increased tensions in the Middle East. How do you view the global, I guess, macro and geopolitical landscape as it pertains to opportunities in Bitcoin, as it pertains to operating a Bitcoin treasury company at this key moment?
Well, the sound of cannons hasn't changed the core structure of why we are bullish on Bitcoin. The core structure is, of course, the inevitability of money printing in the world compared with the absolute scarcity of Bitcoin. And that's why the smallest opportunity for Bitcoin is to go towards the full market capitalization of gold as we have it today, and which is also growing in and of itself. And that in and of itself would mean that Bitcoin could go towards $1-2 million over the medium to long term. And then everyone can make its own assumptions as of the growth of the monetary inflation in the world for the pace at which we could go to that target. And so that makes a witnessable event right now, which is the overall transformation of capital into digital capital, the digital transformation of storage of value. And that transformation is happening at a pace that surprises a lot of traditional finance people as well. I just wrote an article about digital credit and its emergence. And when I wrote the article, I knew that Stretch was having $100 million of volumes every day. And when I was about to send the article, it was already 200 million. And I said, that's several hundred millions of volume. And now it's reaching levels of 500 million and 700 million. And soon enough, Stretch will have billions of volumes per day. And that's creating another imbalance on top of the monetary inflation that we are going to see increasingly with geopolitical tensions as well, is the imbalance of the core market structure, whereby one single entity is able to capture 6 times the natural increase of Bitcoin in circulation through Bitcoin mining, which is in and of itself dividing by 2 soon enough. So that's really the thinking there in terms of the geopolitical tensions inside that framework. Being in the UAE, I've definitely seen mostly at the beginning of the tensions, lesser now, but the price of Bitcoin moving quite accordingly to the tensions. And very soon after, what Yves described was actually observable, that Bitcoin has started to outperform gold from those start of tensions, and that Bitcoin treasury companies have started as well to have an amplified volatility on top of Bitcoin's volatility. So Michael usually says that volatility is vitality. And I like also to say that volatility is opportunity, and I see that Yves would not disagree. So that's amplified opportunity when it comes to Bitcoin treasury companies, because 6 months ago we were already speaking of a bear market for Bitcoin treasury companies that had already started to go down compared with Bitcoin. And now we see that Bitcoin treasury companies have started their movement towards and beyond the Bitcoin price upward potential. And that volatility increase also drives a new market participation. And we see that the pure players, Strategy, Metaplanet, Capital B, Strive, Smarter Web, we are all accumulating Bitcoin, pushing through new innovations as well. And I think a lot of analysts were not necessarily expecting that even 3 months ago. So geopolitical tensions is just a natural evolution towards more money printing at the end of the day.
Absolutely, you got that right. And it has been kind of profound to see that the vision is still there for Bitcoin treasury companies, that laser focused teams have been able to raise funds in this environment. It may not be a bear market per se, as Yves has mentioned, but we've got Metaplanet that just raised $250+ million. Your own Capital B, of course, secured funding and are pursuing a derivatives driven strategy. You've got Smarter Web, who cleaned up their balance sheet and had a recent acquisition, and of course, the lead story is Strategy, who's just scaling at an unprecedented pace. Yves, I'd like to come to you on this. I'm just looking at Strategy's 8K from this week. They purchased 22,337 Bitcoin, and they raised $1.2 billion on their digital credit offering Stretch. With Michael Saylor and digital credit able to basically vacuum up Bitcoin in market environments like this, are there going to be bear markets for Bitcoin in the future? If we can see Bitcoin treasury companies stripping away Bitcoin's volatility for institutions and even individuals, family offices, asset managers, stripping away that volatility to make Stretch into what's become near a zero vol asset and paying a monthly yield, a monthly dividend. Are bear markets coming back?
So, bear markets, again, it's a question of definition. Volatility is not away. Yeah? So we'll have events of one volatility. We will have events of one volatility and a half, which will be rarer. We'll have events of two volatilities, which are going to be very, very rare. Once every 5 or 6 years, we'll have a very strong reduction of prices, which is going to happen. But what matters the most in my mind, it's two things. What Michael Saylor is doing is a very, very well-tested model. It's a model which is extremely old. Do you know about that, Tyler, or not?
Tell me more.
The model started in 1694. In 1694, there is a group of businessmen that met in London, and they decided to create a new corporation, which business model would consist into raising capital in order to acquire gold. Do you know how they called the company? They called the company Bank of England. In 1800, there is a statesman in France called Napoleon. He organized a meeting amongst the 100 wealthiest families of France. And he told them, guys, you need to do like the English. You are going to create a corporation which is privately owned. And you are going to raise capital in order to buy gold. And you are going to call this company the Banque de France. And those two companies, Banque de France and Bank of England, became the most prosperous and the most influential companies in the world until they were unfortunately nationalized in 1945 and 1946. All of that has been described in a theoretical fashion in the most precious book you can buy. It's a book called Denationalization of Money by Friedrich Hayek. Friedrich Hayek in 1976 says humanity has been looking for storage of value for thousands of years. And in order for a central bank to be effective, in order for money to be effective, it should not be run by governments. And this is the book of Friedrich Hayek, Nobel Prize of Economy, 1976, Denationalization of Money. So this is one aspect of things, which is how to effectively, from a rare asset, how to effectively generate something that can store value and something that can, be at a later stage a medium of exchange. Gold has never been a currency. It's wrong. When people tell you gold was the previous currency, it's wrong, in fact. Gold has always been a reserve asset. Okay? Some currencies were printed on gold, but in fact, it was not gold itself. It was the coins constituted of gold. Okay? What really happened more recently, which completely changed the landscape, it's technology, in fact. Bitcoin has nothing to do with financial engineering. It has to do with technology. In fact, human beings have had, in their long history, they have had to deal with problems. And very often, first of all, they deal with the problem in an intuitive fashion. And one day, they put in place a technological solution that deals for the problem once and for all. For thousands of years, we're dealing with infections. And we're dealing with that in an intuitive fashion until we found a solution, antibiotics or antiseptic. And it was a technological solution. One of the oldest problems of humanity is storage of value. And for thousands of years, we have dealt with this problem of storage of value in an intuitive fashion, using shells, using stone arrowheads, using brass, using silver, using gold, using printed papers by the king or printed papers by the government. And it's in 2008 that somebody proposed a solution, and in 2009 that he put in place for the first time ever in the history of humanity. He has proposed a technological solution to storage of value. Something that is effectively solid, something that is effectively exchangeable, something that is effectively scarce, something that is fully digital. And this construction that I'm talking about, those few characteristics, for the first time ever in human history you had something that was put in place that has the characteristic, the optimal description of what could be used for storage of value. And this is why we will have accidents of volatility, but bear market, which will bring us towards a not significant price from 20 to 3,000, it was tough. I don't think we'll see that ever again. I think that the world of finance, the smarter people in the world of finance have understood the value proposal of Bitcoin. When people like BlackRock, when people like the sovereign wealth funds understood what is a value proposal, it's very rare that something that works disappears. A technology, very often people try to describe technology in terms of good and evil. It's wrong. You should never describe a technology to check whether it was good or evil. Is a knife good or is a knife evil? This is not the good question. The good question is whether a knife works or whether it doesn't work. So the question is not whether Bitcoin is good or evil. It's whether it works or not. And I cannot find one single example in the history of technology that a technology that works that has not been adopted. So I think really in the terms of and so maybe you will tell me, maybe we'll find something better than Bitcoin, an improved version of Bitcoin. I'm absolutely sure that in order to improve Bitcoin, you need to simplify Bitcoin. You don't need to make it more complex. You need to simplify it. And finding something which is more simple to describe as Bitcoin is in fact very tough. I need 5 words to describe what is Bitcoin. It's digital, it's solid, it's peer-to-peer, it's governance decentralized, and it's 21 million. And there are no, I challenge you to find any other financial asset that you can describe in 5 words. I don't think you will find it. It is the simplest financial asset in the world. And in order to improve it, you need to make it simpler. I think it's going to be difficult.
Yeah, well said. And I think part of the hurdle for more people to understand Bitcoin is not its simplicity. It's the fact that they don't think about money generally. But once you do start thinking of money, and the ledger and the value that it represents, the transfer of value, I think it is hard to find something that could be simpler than Bitcoin as money. You mentioned the denationalization of money, and Hayek certainly I think would have been a strong Bitcoiner, because he definitely I would say advocated for a free market in money, where either private companies or now private networks do compete and allow users to choose the most stable currencies. Alex, as you talk with capital allocators, you talk with investment bankers, as you're looking to raise money. Of course, the Bitcoin native capital allocators and funds understand why Bitcoin is good money. Do you find it's a bigger hurdle, and what do you expect needs to happen for more of the traditional finance world to understand Bitcoin as a solution for perfect or at least the best money that we have available to us?
Let's define the term money, of course. Money typically is misunderstood because people think of it as the medium of exchange only, because they just look at the paper they have in their portfolio and they think that this is money. That is just a perpetual debt instrument that pays nothing against the government, and that actually has a 7% annualized a loss over time in terms of actual inflation. And so there is a dilemma for traditional investors when they look at Bitcoin, because money is effectively a store of value, a medium of exchange, and a unit of account. But let's take a look mostly at store of value, medium of exchange, and realize that no money with no store of value property has survived over time. So the store of value is actually the most important aspect. And that's why we can say that Bitcoin is money and everything else is credit. But that's also why Michael usually simplifies that by saying that Bitcoin is digital capital, because traditional investors understand money as a toxic asset that loses value over time, and understand capital as an asset that can appreciate over time. So digital capital is much more appealing to traditional investors than the term of money or digital money. And so there is a general dilemma today for investors that don't want volatility. They have the choice between cash that has zero vol, at least in its own currency, because there is FX vol as well, but very close to zero vol, but minus 7% inflation, decrease of purchasing power in the US over 100 years, every year 7% of loss. Or monetary funds that yield 3 to 5%, and that's only half what is needed to cover for the inflation. And so there comes the solution, which is the equivalent of a bank account that pays 10% plus, is Stretch. And Stretch is effectively not simplifying Bitcoin, but providing a distribution, simplified distribution of Bitcoin by taking out 10% of its performance and keeping the remaining performance for the company, effectively over a long time period. And that is extremely powerful because it's much easier for 99% of the population to understand what is a bank account that pays 10%. That is a very short conversation. The issue, it's not an issue, in fact, but the challenge is that today Stretch is not yet a perfectly 0% vol asset. It has today a 1.5 to 2% vol. And actually it has a ratio of 5 for the Sharpe ratio. So a Sharpe ratio of 5, which is absolutely exceptional in traditional standards. It's not even comparable to the rest. It wouldn't even fit with the same chart of other instruments. Bitcoin, when it's in a bull market, is around 2.5 to 3 of a Sharpe ratio. And now Stretch is at 5. And Strategy has added that Sharpe ratio to the website. But to reach 0% vol, there will be, at some point in the future, a major bank that will take Stretch and that will distribute Stretch with 8% and keep the difference of Stretch. And so you see layers of distribution of Bitcoin that strips away the volatility and provides a portion of the returns. And that also feeds then into the Bitcoin accumulation of Strategy and into the potential of higher adoption and higher prices of Bitcoin itself, because that creates higher demand for Bitcoin. And what was very impressive in this week's Strategy announcement is that for the first time in size, Stretch has surpassed the ATM in equity in terms of capital raising, and by orders of magnitude. The ATM in equity has raised $390 million, and Stretch has raised $1.2 billion. And this is in 1 week. So Strategy, if it continues, is on its way to reach 1 million Bitcoin towards the end of the year or early next one at constant prices and, of course, comparable demand levels. But this is extremely striking and cannot be sustained unless Bitcoin price goes up, basically.
Yeah, I'd like your take on that, Yves. You wrote a paper, I believe it was last year, accounting for the performance of MicroStrategy, where you broke down Bitcoin yield and accounting for the leveraged Bitcoin exposure that strategy deployed. And in it, you kind of made the point that mNAV could be unchanged, but it doesn't tell the whole story in how strategy can outperform Bitcoin. Could you break down maybe kind of what you learned in your research for that paper and how now the digital credit, which kind of updates your findings in that paper?
So the article was published in March of last year. The title of the article is Accounting for the Performance of MicroStrategy. And the idea behind the paper, as you mentioned, was to try to decompose or to decompose mathematically, not in statistical fashion, but in an arithmetic fashion, the performance of MicroStrategy across any period of time. So it's a formula that works across 1 day, 1 week, 1 quarter, 1 year, or 4 years. And systematically, the performance of MicroStrategy can be decomposed into 3 terms. One term, which is exactly the Bitcoin yield, as defined by Michael Saylor. The second one has to do with Bitcoin exposure. It's a nominal exposure of the company to Bitcoin. And the third one has to do with the variation of the mNAV. Okay. So what is the mNAV? The mNAV is a concept which is incredibly simple to understand. Have you heard of a company in France called Hermès? Hermès.
Yeah.
Hermès is a luxury company, and they manufacture mostly ties for Alexandre and handbags for his wife.
He's keeping them in business for sure.
And if you look at the company called Hermès, they have a balance sheet. And on the asset side of the balance sheet, they have boutiques that they own, they have factories that they own, they have some stocks of ties and handbags, and some treasury in euro. And the total of the asset, of the net asset value of Hermès, is 20 billion euros. When the market cap of Hermès is $200 billion. What explains this huge difference between the NAV of Hermès and its market cap? There is one word that explains the difference. The word is the word speculation. In the noble sense of the term speculation. Speculation comes from the Latin word speculare. Speculare in Latin means to be able to see. This is why those are called spectacles. Speculation and spectacle have the same Latin root. A speculator is somebody that has a vision of the future and that will want to try to implement a portfolio which will take advantage of his vision of the future. So the difference between the market cap of Hermès and the NAV of Hermès is simply motivated by the fact that people speculate that the future earnings of Hermès, when actualized, are more valuable than the net asset value of Hermès. This is why they're ready to pay a price which is a high value, which is a high multiple of the NAV of Hermès. This has to do with something called market sentiment. When the market sentiment on the earnings of Hermès is bullish, the mNAV of Hermès is very high, 10 times. When it's more bearish, it can be below 1 because guess what? The factories of Hermès are not extremely liquid. And the boutiques of Hermès are not liquid, and the handbags of Hermès and the styles of Hermès are not extremely liquid. In the case of a Bitcoin Treasury companies, the mNAV should never grow significantly in a sustainable fashion below 1 because here the assets are incredibly liquid. So you have, in fact, an incredible opportunity in the market today, which is to buy at an mNAV which is not very north to 1, something which future mNAV, as soon as the market sentiment on Bitcoin is going to be more bullish, I can tell you the mNAV is going to go back far, far, far away from 1. On the upside, obviously, in the same fashion that the mNAV of Hermes, as of today, is something like 10. It's a multiple of 10. You don't value a company by looking at its assets. You value the company by looking how much you speculate it can enrich you. And obviously, Bitcoin yield and some other parameters. The second thing is this magic that he has invented, which is perpetuals. The last one is stretch, but all of the perpetuals are incredibly interesting. What do I do with euros and dollars? What is the only reasonable use of dollars and euro you can do? The only use you can do is reasonable. You know, look at governments. What do they do with their dollars? They borrow. The most clever thing we can do with a dollar or with a euro is to borrow it. And you want to borrow it not over 3 days. If you can borrow it over 3 years, it's fantastic. If you can borrow it over 10 years, it's better. Why? Because you are borrowing something that is valuable and you will give it back when it's less valuable. This is the strategy of governments. If it's too difficult to explain, maybe I can explain it differently. I'm going to borrow from you a banana, Tyler, and 30 years from now, I am going to give you back the skin of the banana. This is what they do.
Yeah.
So imagine, so I told you you want to borrow that over 3 years. Even better, over 10 years, over 30 years. No, guess what? I'm going to borrow it from you. I am never going to give it back to you. This is a perfect story. Why don't I want to borrow it over 3 days? Because if I borrow it, as soon as I borrowed it, what do I want to do with it? I want to get rid of it. I want to sell it because it loses value. As soon as you buy it, it loses value. It begins to lose value. So you want to sell it as soon as possible in order to buy something that loses less value. Okay? But something which is going to be volatile, of course. It doesn't have a constant price in dollar because something that has a constant price in dollar is something that loses value over time since dollar values loses value. Okay? So the perfect thing to do is to be an issuer of stretch. So buying stretch is great because you have a high yield. There is one thing which is even better, which is to be the issuer of stretch. And all of us, Tyler, Alex, and myself, we can issue stretch. How would you issue stretch, Tyler? Yourself, as a person.
Well, a really popular product here in the United States is the home equity line of credit.
No. There's much better.
Of...
Much better. If you want to be the issuer of stretch, Tyler, you simply buy a share of a MicroStrategy. You become the issuer. If you want really to borrow money over perpetuity, pay this ridiculous 10 or 12% per annum in order to buy Bitcoin, which is my dream come true. I simply need to buy a stake of MicroStrategy.
Because you can own the company that is issuing stretch.
Voila! You don't need to replicate it yourself. You simply buy the company. And you would have done it yourself, in fact. You become the owner of this company, which is doing this which is taking advantage of this incredible opportunity, which is, it is that people are okay to give you dollars today, and they want simply that dollar back 30 years from now. They want to give you bananas as soon as you promise them, don't worry, I am going to give you the skin back 30 years from now. That's crazy. So let's take advantage of this opportunity.
Yeah, it is a huge opportunity, and like I said, the analogy is that, like I said, here in the States, that Saylor has almost created this perpetual home equity line of credit that it has interest only payments, can't be recalled. There's there's no
There's no
covenants.
liquidation risk. There's no liquidation risk.
Yeah, really incredible. And I think you made a salient point about mNAV as kind of the balance sheet creating a floor, the Bitcoin on the balance sheet creating a floor around one mNAV, and Treasury companies certainly shouldn't be trading below that for very long unless there's some other stress on the company. But as Murray Rothbard famously said, all economic value is derived from subjective utility, and the market is placing a speculative bet on all equities in the marketplace.
There are today people that are ready to sell you at an mNAV of 1 or very slightly above 1, something that could reach and has reached in the past mNAV of 20. Okay, let's take this opportunity.
What an opportunity.
Yeah. And what is funny is that people are shorting, are net shorts those equities. Okay, let's buy from them. And let them continue to short it. And we are going to become the owners of a company that can borrow forever with never giving back the cash, spend the cash on day one in order to buy probably one of the most precious assets that has been created and most sustainable asset, because Bitcoin is here forever. As soon as you have one or two nodes working, Bitcoin is still here. Can you imagine? It's something that will not be destroyed. It's finished. It's here forever, and nobody can do anything about it. As soon as somebody is okay to be the holder of a node, Bitcoin is here. So it's really a fantastic opportunity. And people will tell you, but maybe it's too late. Come on, nobody owns Bitcoins. Nobody owns Bitcoins. You have only 21 million of it. Do you have any idea, Tyler, how many millionaires there are in the planet? There is 100 million
Millions.
millionaire. And there is only 21 million Bitcoin. So I am absolutely sure that a time will come at which those millionaires are going to fight in order to own Bitcoins. And there will be only one field to fight on. It's the price. And those people who will have accumulated Bitcoin, especially with this kind of magic leverage, which is not a leverage that you can that can be liquidated, never be reimbursed. Wow, it's a dream scenario.
Yeah, I bet Michael Saylor sleeps like a baby. What about you, Alexandre? You're being the head of a Bitcoin treasury company. Are you sleeping like a baby these days?
Well, we are an early stage strategy in Europe. So I guess I sleep as Michael when he was early stage strategy. You of course want to be having that automated credit issuance capability in the public markets, and that is really the end goal. And that is why you have a few companies, and we've been of course focused since the beginning to be that one over in Europe, to be laser eyes focused on deploying the strategy playbook at European scale. And that includes steps of size, of liquidity, of institutional participation, of retail market participation, of consistency, of quality of the balance sheet, of quality of the shareholder base, of financial discipline, clarity, and focus of the management team on that specific KPI of increasing Bitcoin per share over time with operations that allow the company to accumulate and accumulate and accumulate Bitcoin in a way that makes it quite inevitable with the framework that we described before, that the balance sheet of that company in that specific region could become, over time, as Bitcoin grows, if the company is focused on accretive long-term operations, to become one of the largest companies in its own continent. And the objective, and that's why Metaplanet is issuing a lot of equity and additional potential for more size with warrants over time. This is to reach levels of size that maximize the potential for success of automated, listed, distributable, scalable credit products in a specific market. And that is also for that scenario that Capital B is positioning. And this week, we announced an innovative operation. In fact, with TOBAM as a partner on this operation and UTXO Management as well as a strategic investor too, in an operation that is quite innovative, which is to address the global derivatives market, which is unaddressed today, not as an end goal, but as a way to continue accumulating Bitcoin and continue increasing Bitcoin per share over time with built-in parameters that are there to make sure that the company can, over time, continue to increase and maximize Bitcoin per share. And that type of operation is the following, is to issue straight warrants and for the company to receive an upfront premium that allows the company to directly buy Bitcoin with no issuance of shares, and that allows the investor to fix a price at which, at a premium from today, where the investor will be able over time to take advantage of that difference between that anticipated growth in the market compared with a fixed price based on an investment that was made at a time where the market was speculative more to the downside, and where the investor saw the opportunity to fix an opportunity in the future, and as well in partnership with the company with a moving dynamic floor of mNAV 1.1 that makes sure that the company has a built-in condition to continue to increase Bitcoin per share over time, which aligns of course, the interests of all participants. So that's the first of its kind. And 6 months ago, I used to get all of those questions of what are the tools available for a company to accumulate more Bitcoin, independent of the volatility that you see in the market to the downside, or with the uncertainty, the doubt, the fear. And one typical option that was talked a lot at the time was to play with Bitcoin and to do innovative things with the Bitcoin. And Metaplanet has been very successful at using Bitcoin volatility to sell options and to generate revenues. But in a way that was very segregated and that was distinguished from the balance sheet strategy of not touching the Bitcoin. But by doing what we just did, we tapped into a completely new market which is to monetize the volatility of the company itself without having to encumber some Bitcoin or to take a risk with some Bitcoin. And that is, in fact, a much more efficient way over time, potentially, because the stock has more volatility than Bitcoin itself as well. And just to put things into perspective, we raised 3 million euros straight with no issuance of share. And just to put things into perspective, the company has a positive operational EBITDA of 1 million euros. So in one single operation, the company is able to collect 3 million euros in premiums, which is 3x the operational EBITDA of the company. So that's quite significant, in terms of an operation, which is also conducive to a potential of 27 million euros or more of additional capital raising, which is also quite significant at the scale of a company which has today about a $200 million market cap. So in all of this to say that the steps, in the sea, when there is wind in front of you, you go this way, this way, this way, and you continue to accumulate Bitcoin in a way that increases the size of the company, maximizes the potential of the company to raise additional capital when the wind is on the other side and pushes you forward, and provides more opportunity for investors overall as well. And that's that type of innovation that over time will also lead us towards the new innovations that we can do in terms of digital credit and listed digital credit. That is our ambition.
It's been really inspiring to kind of see, as there's been mNAV compression, that you've remained laser focused on that Bitcoin accumulation strategy and are looking for new ways, new opportunities through this. I'm not going to call it a bear market. Yves will slap my wrist, but to just get that flywheel moving, because famously Saylor took on a lot of various types of loans, convertible debt, and different opportunities that presented himself through his first bear market to become the Bitcoin accumulation engine that he's become today, that strategy has become. Yves, we're running up against our time here, but I want to give you the last word. Again, you've told me we're not in a bear market. You've given us some inspiring takes and opportunities through this, but I'll leave the last word with you.
Okay, I would like to comment on a few words that Alexandre said. What is a reserve institute? What is a central bank in the meaning of the Bank of England of the 19th century, of the Banque de France, when the French franc was really indexed to gold, etc. A reserve institute is a company which is trying to have an asset which is as simple as possible. There is nothing more boring than to own a cave full of gold bars. There is nothing more boring than to own Bitcoins. The financial engineering is something which is organized at the level of the liabilities. And I really think it's something which is very important to have in mind. The idea is not to generate Bitcoin by using the assets. It is to generate yield using the liability side of your balance sheets. I think what we see in terms of inventivity, on the side, of course, of strategy, on the side of MetaPlanet, very recently on the side of Capital B, is proving us that they are exactly executing the program of what is a reserve institute. And in fact, the first one who mentioned there would be a reserve institute which asset is constituted with Bitcoin, you know who it is? It's Hal Finney. Hal Finney himself said Bitcoin will not scale to become the money of the future. He said it in a forum on the 10th of June of 2010, on 10th of January of 2010. I'm going to send you the reference if you want it. But it's something fantastic. Hal Finney himself said, Bitcoin will not scale to become the currency of the future. I think the most advanced nowadays mock currency of the future is Stretch. You know, in literally hundreds of countries, you are lacking a saving markets. There is no saving in so many countries of the world. I mean, reliable savings. If you want to save a little bit of value, you will put some dollars in your mattress, but you're going to lose value. It's going to evaporate over time. If you buy Stretch, you have a first vector of storage of value, which is efficient. It's fantastic. So it's not Bitcoin itself. It is the liabilities issued by those companies who have accumulated Bitcoin. And those are going to be the next media of storage of value. I'm absolutely convinced with that. I come from a country which has been hit by hyperinflation. I know how much it is important for those people to have some banknotes in their mattress. With tokenization of Stretch, which is going for sure to be the next step. Imagine a tokenized Stretch. Imagine a Stretch that you can buy for 100 USDC and that will deliver for you 1 USDC per month. This is the perfect saving product of the planet, for the planet, for billions of people that are lacking this possibility to save part of the value they have created. And you will be able to store that in your smartphone, in your ledger, wherever you want. And you will have 1 USDC for each 100 USDC saved, 1 USDC that will arrive to your wallet every month. This is going to happen. This is not it's science fiction today, but it's for sure it will happen. And this is going to completely change. Sorry, what did you say, Alexandre?
Yeah, it's starting. There are already 3 projects with Buck,
so it's obvious.
Apex, and Saturn.
And those guys who organize the tokenization are going to simply buy Stretch. And this will be the value of the future.
And then distributed by banks as well.
Yes. So this was my my last minute.
Yeah, thank you so much. I expect you're going to look like a visionary in 10 years, Yves, talking about this, because from our Western perch, you know, we talk about everybody needs Stretch across the world, especially countries that are facing hyperinflation. And, you know, we see people in Argentina buying bricks to store their value because they don't know the price of bread tomorrow. But thank you so much, you guys, for your time. Yves Choueifaty of TOBAM and Alexandre Laizet of Capital B. Great conversation. Thank you, gentlemen, for your time.
Thank you so much. Talk soon.